You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 25th day of September, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a link, purple button. Click it, fill out the registration form, hit submit. We'll get your desktop set up today, get your indicators indicating today. Then your trial will officially start tomorrow. Now, I know tomorrow's Thursday, but you'll still get 5 consecutive trading days, even if it stretches over the weekend. In most cases, that means a 5-day trial really turns into a 7-day trial. You might ask, what good are the indicators to me over the weekend? Well, some markets trade over the weekend. Plus, it's an opportunity for you to kind of get familiar with them, use the market replay that's built into TradingView. It works better than any market replay that I've ever had the opportunity to use. Now, this broadcast, the afternoon broadcast, it's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. Best way, just go to mytradingiq.com and scroll down the page this time to where it says noon broadcast. Click that, fill out that 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. You already have the YouTube part down, so just remember, CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. For those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just go through the years, pick some days at random, watch a little bit, jump to another day, week, month, year. You get the idea. But our history, it's right there. It's archived. You can see how we've evolved since the beginning. Well, actually, it doesn't take you all the way back to the beginning. The beginning would be 2005. And I think on YouTube, we go back 8 years. So originally, we started out as just a podcast. There was no video at all. Then we stepped up to also having video. And then we stepped up about 8 years ago to recording each and every daily broadcast on YouTube. So shout out to YouTube and the good folks there who keep this thing running. All right, our daily schedule on the screen. Start with our devotional, word of prayer, little news, recap of the alerts, the logic, the concierge. About 50 minutes into the broadcast, Michael will join us, give us a recap of what happened this morning in the live training room. And then we'll go live on the TradingView platform and do some live trading for about 30 minutes. And then wrap it all up with our good word for the day. Now, the devotional topic that we're on this week, Sermon on the Mount, a blueprint for life. Today is day 3. We'll wrap it up on Friday, day 5. Today's scripture is Matthew 6, verses 1 through 4. I'm going to share it with you from the Message translation. Be especially careful when you are trying to be good, so that you don't make a performance out of it. It might be good theater, but the God who made you won't be applauding. When you do something for someone else, don't call attention to yourself. You've seen them in action, I'm sure. Play actors, I call them. Treating prayer, meeting, and street corner alike as a stage. Acting compassionate, as long as someone is watching, playing to the crowd. They get applause, true. That's all they get. When you help someone out, don't think about how it looks. Just do it. Quietly and unobtrusively. That is the way your God, who conceived you in love, working behind the scenes, helps you out. Matthew 6, verses 1 through 4. So today we're going to talk real briefly about something everybody worries about. Worry. Don't worry. Worries where we mull over, ponder, and think of a negative outcome until it causes stress, anxiety, dread, and fear. We usually see things turning out very badly and imagine the worst case scenario. We can't see that anything will get any better, only worse. What we know about the soul is that whatever we continue to think affects our emotions. And so anxiety, stress, and fear begin to take over and dominate us. From this point, we start to make decisions based on all this negative thinking, because this is how we feel. We can tend to withdraw, avoid, shrink back, and try to work things out in our own strength. Jesus says, do not worry. The reason Jesus said for us not to worry is because of who our Father is. He's the creator of everything. He created everything by His word. He created us, and He is all love, all power, all knowing. So if we are believers, then we are also sons and daughters of God. We have access to all His help, wisdom, power, which actually dwells in us right now. If He is already in your heart, then everything you need is on the inside of you by the Holy Spirit. So then the battle is in our minds, our imaginations, and this is where worry begins. What are we allowing in our minds? What are we allowing our imaginations to see? We have got to be intentional on what we think on. This is why Jesus, in His Sermon on the Mount, says, don't be like those who don't know God. Don't go down the wrong path to get things in your own strength, stressing and worrying. But seek God. Seek His kingdom. Seek His promises. Seek His word in your situation, whatever it is. Think on these things. Look at these things in your thoughts and imaginations. Where you are looking is key. Whatever you put your attention on is the direction you will head in. Faith in God and His word, and always looking at His words. Your eyes are on Him. We know when we are worrying and anxious, we have taken our attention off God and His kingdom ways and put them back on our own ability and strength. But 2 Peter 1 says, we have already been given all we need for life and godliness through the promises of God. This is not easy, as there are plenty of things going to tell you it's not true. So what kingdom are you operating in today? Where are you looking today? Kingdom of God operates by faith, trust in God's ways, God's word. All the other kingdoms of the world operate in stress, fear, worry, anxiety. Jesus came to deliver us from all of that by showing us a different way in His kingdom. Join me in a word of prayer. Heavenly Father, as we reflect on the words of Jesus in Matthew 6, remind us to do our good deeds in humility, seeking only your approval and not the recognition of others. Teach us to give in secret, knowing that you see what is done in private and will reward us according to your will. And Lord, as these presidential elections draw so much closer, we pray for wisdom and discernment for all voters. Guide the hearts of our leaders. Protect our nation. Let your will be done in America, bringing peace, unity, and righteousness to our land. May your truth prevail and your love guide us through these times, as turbulent as they may be. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Guys, I got a message yesterday. A friend of mine, going all the way back to probably 1998, 1999. His name was Wesley Dixon. I spent 20 years ministering to Wesley. And it was, many of you know what I was involved in long before CFRN. Wesley was very much a part of that. He was a very special and unique individual. He had powers of persuasion that most of us can only dream of. I got the message yesterday. Well, last week, I got the message that Wesley had been in prison for 2.5 years. I had no idea. About 3 years ago, he called me. I did not return his call. But my wife spoke with him last week. He was in good spirits. All was good with the world. He was out. Had a job. Don't know that he was necessarily back on the right path again. But now he's gone. Wesley, I pray you're on the right side of the River Jordan right now, and that you can hear me, and that you know how very much both my wife and I loved you and your whole family and all of your kids and all of your grandkids. And I pray that we see you again someday. Okay, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's down 240 points. NASDAQ is up 17. S&P 500 is down 5. And the Russell 2000 is down 11. Not a mover or shaker in the bunch. In the commodity basket, crude oil down $1.50, or $1,500 per contract traded. That's a drop of a little over 2%. Last trade 70.07. Gold up $4, trading 26.81 last. Silver down 27 cents, trading 32.15 last. That's a drop of almost 1%. Silver's had some huge up days, yesterday being one of them. So when we go to the charts, it'll sort of make sense. When you have wide-ranging days, it is quite common in all markets to see a following day, and we had a couple of strong days in silver. So to see a sideways day of some quiet consolidation by comparison, that's pretty much to be expected. In the Asian markets, at the close, Nikkei fell 70 points. Shanghai rose 33. For the Shanghai, that's over 1%. The Hang Seng gained 128 points. And in the European markets, at the close, FTSE down 14. DAX down 78. CAC down 38. No movers, no shakers. Pretty quiet out there. So we had a mixed day in Asia. It was a red day for the UK. Not a big red day, but red nonetheless. And right now. Let me refresh this one more time. It updates in real time, but sometimes I just like to refresh it. Yep. It is a mixed Radio Wednesday. We've only got one of the indices in the green. That's the NQ, up 18 points. Again, the Dow's down 241, S&P down 5, the Russell 2000 down 11. I suspect the NASDAQ will be joining the others shortly, but we'll be patient. Let's see what the market gives us. News. Helene is expected to make landfall on Florida's Gulf Coast late tomorrow as a potential Category 3 storm, prompting a state of emergency in 61 of the state's 67 counties. At the time of this article, Helene is poised to strengthen into the Atlantic's fifth hurricane today after it passes through the Yucatan Channel near Cancun. Helene is the Atlantic's 8th named storm of the year. Caroline Ellison, the former CEO of Alameda Research, was sentenced in New York yesterday to 2 years in federal prison and ordered to forfeit $11 billion for her role in the collapse of cryptocurrency exchange FTX. The sentencing was stiffer than what prosecutors had sought. Judges can do that. Ellison pleaded guilty in December of 2022 to 7 criminal charges, including wire fraud and money laundering. The 29-year-old was a key figure in the $8 billion fraud scheme orchestrated by FTX founder Sam Bankman-Fried. Ellison admitted to conspiring with Bankman-Fried by lying to investors, stealing FTX customer funds, and using those funds to create misleading financial statements. Ellison testified against Bankman-Fried, her former colleague and romantic partner, in his trial last year. He was found guilty in November and sentenced to 25 years in prison. 2 other senior FTX executives also pleaded guilty and will be sentenced October 30th and November 20th. Hall of Fame quarterback Brett Favre yesterday was diagnosed with Parkinson's disease. The disclosure from the 54-year-old, who primarily played with the Green Bay Packers during his 20-season NFL career, came during congressional testimony on the misuse of welfare funds. Parkinson's is the world's second most common neurodegenerative disease, affecting roughly 10 million people globally. It stems from the premature decay of dopamine-producing neurons in the midbrain. The average age for a Parkinson's diagnosis is 60 years old, making Brett's diagnosis slightly earlier than usual. Treatments typically involve mimicking dopamine in the relevant neural region. Through the efficacy of such treatments declines over time. Brett was testifying over his involvement in a Mississippi welfare fund misuse scandal. He was found to have received $1.1 million in speaking fees for speeches he never gave from welfare funds, and was linked to the use of $5 million in welfare funds to pay for a volleyball facility at his alma mater. Brett hasn't been criminally charged and has repaid the speaking fees. How do you get paid for speeches you never gave? Huh. It's interesting. Certainly not something I would recommend. All right, let's go look at some market news. Get over to that page. All right, there we go. Well, we just prayed about the upcoming elections, that God would keep his hand, his sovereign hand over our nation. Kamala Harris and Donald Trump both are aiming to be the candidate of manufacturing. But this week they are offering radically different pictures of the state of that industry while promising to help in nearly opposite ways. Vice President Harris will speak today before the Economic Club of Pittsburgh, where, according to a senior Harris campaign official, she will unveil a third plank of her opportunity economy agenda focused on spurring new factories. I missed the first two planks. The plan says she will lean heavily on using government incentives to spur the manufacturing sector. Now, government incentives, everybody knows what that means. That's tax dollars, your tax dollars. To spur the manufacturing sector with new proposals promised in the afternoon speech that will outline sectors she would prioritize for further manufacturing expansion if she wins this November. Harris is also set to tout a flurry of manufacturing activity in recent years under the Biden-Harris administration and cast her plans as a way to continue that upward trend. A series of recent government efforts, from the bipartisan infrastructure law to new green energy incentives to the CHIPS and Science Act, focused on semiconductors, contributed to a more than threefold increase in new U.S. factory construction in recent years. President Trump, by contrast, painted a darker portrait of the state of manufacturing and offered a different approach in a speech yesterday. In that address, he focused on using new protective tariffs alongside other measures like lower corporate taxes and fewer regulations as a means to spur factory building. He said, "With the vision I'm outlining today, not only will we stop our businesses from leaving for foreign lands, but under my leadership, we are going to take other countries' jobs." That was at a speech in Savannah, Georgia. He also called recent years a horror show for manufacturing, but ignored the boom in factory construction, a metric that was largely flat during his 4 years in office. He focused instead on specific examples of increasing foreign footprints among well-known companies like GE and IBM, as well as the possible sale of U.S. steel to Nippon Steel in Japan. But at least in the case of the proposed sale of U.S. steel, company officials on both sides of that possible acquisition said they wouldn't move additional steel manufacturing overseas if the deal is approved in coming months. Well, we got a jumbo rate cut, and they're saying we may get another one. The Dow and the S&P have recently reached record highs as stocks rally following the Fed's interest rate cut last week, with an aggressive 50 basis point cut initiating the easing cycle, which Jerome assured us had nothing to do with politics at all. Wall Street is trying to gauge the Fed's next move and its implications for markets going forward. Remember, after November, there will be no political incentive for cutting rates. While initially surprised by the Fed's 50 basis point cut, strategist Brian Jacobson says he's now warming up to the idea of another aggressive cut. Although he previously believed a 25 basis point cut at each meeting for the remainder of the year made sense, he now expresses concern about continued labor market weakness. Well, those 20 million people, they got to go work somewhere or turn to a life of crime or continue a life of crime. Yesterday we talked about China's big economic stimulus, the biggest since the pandemic, and it's reverberating in stocks and commodities worldwide. After the details of the monetary stimulus and support for the stock market were announced Tuesday by the People's Bank of China, the nation's benchmark index, the CSI 300, surged 4.3%, its largest jump since July of 2020. If you remember, yesterday we had two of the Asian markets that were up over 4%. And last, gold traded steady near an all-time high as weak U.S. data bolstered the case for deeper interest rate cuts. Bullion climbed to a record $2,670.57 an ounce earlier today, before giving back some of the gains. A report on Tuesday showed U.S. consumer confidence this month fell the most in 3 years. Swaps traders increased bets for more than 3/4 of a point of easing by the Federal Reserve this year. Lower rates tend to benefit both gold and silver as they don't offer interest, while a weaker dollar makes the metals cheaper for many buyers. Gold has surged 29% this year, while silver has risen 34%, with the rallies gaining momentum after the Fed's half-point cut last week. Imagine where it might end up if we get another half-point cut. I don't think that's baked into the market yet, but it could be. The more they talk about it. All right, Logic 247, our 24/7 around-the-clock E-mini alert service. We're in week 321. Over the last 321 weeks, we have issued over 17,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So Valerie did this recap this morning at 6:30 a.m. Eastern. So some things have changed. She'll update the recap this afternoon, sometime between 3 and 5 p.m. as she normally does, and then probably one last time, end of the day before she heads off to bed. So this is Wednesday. Monday we started out with 30%. Yesterday that dropped to 21%. And now today, Wednesday, we're down 15%. 20 since the markets opened Sunday night at 6 p.m. Eastern. We issued a total of 26 alerts. At the time Valerie did the recap, we were still waiting on the outcome of 6. So that gave us 20 actionable alerts, of which 3 or 15% would have been stopped out. Again, based on simple market structure and a very, very simple process we teach all of our passport holders. Now, The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Each logic alert has an entry price, an initial target, often several additional targets, and then a final trade to target. The purpose of the logic alerts is not for you to just trade them so you don't have to learn how to trade. It's a tool to help you learn to read the chart. Because until you can read the chart, imagine trying to learn biology if you couldn't read the biology textbook. It would be kind of hard, right? So, the logic alerts will help you learn to read the chart. They'll help you see windows of opportunity in the market. It'll help you know where to expect resistance, where to expect support. On the alerts that have multiple targets, the space between target number 1 and target number 2, that's a window of opportunity. From target number 2 to target number 3, that's a standalone window of opportunity all on its own. So you got to show up, you got to do the work, but if you do, within a couple weeks, you'll be able to look at a 30-minute chart of any market and know with a high degree of probability what the next high probability move is. No one knows what the market's going to do next. I know all those websites and emails try to convince you they do, but it's not possible. I spoke to so many people who spent so many years and so many hundreds of thousands of dollars chasing that holy grail, so they never have to get stopped out again. It is not possible. There are too many factors in the equation. When God created Adam, he didn't give Adam the ability to change the past or know the future. And that still holds true today. Sure, there's all kinds of predictive analysis, right? Logic 247. That's predictive analysis. But over 321 weeks and over 17,900 alerts, we've still averaged being stopped out 20% or less on a weekly basis. As I said, this week we sit at 15%. So if you're spending money and time chasing some kind of holy grail where you won't ever get stopped out again, you need to put the mouse down and do some thinking. Okay? It's just not possible. You can believe me or not, it's your time, it's your money, and I don't know how much time or treasure you have left, but I just hate to see you go down the wrong road looking for something. It's like looking for a black cat in the dark that doesn't even exist. That's the Holy Grail. Okay? Now, the CTAs don't come out around the clock. They're published as a static report shortly after the Globex Open each evening. So the markets opened for the Wednesday session last night at 6 p.m. Eastern. It was 6:55, is that right? I guess I was running a little late last night. So, just before the second 30-minute candle closed, all of our members and trial members had all of these targets right here. And if you're a member or a trial member, make sure you read this information up here to help you better understand how to utilize these targets. Let's look at the daily chart of the S&P, as we do every day, right about this time. Okay, here we are. We have Fib retracements over here, which go from the low of April 19th, the all-time historic high just put in a few days ago, September 19th. We had a couple of days, a couple of inside days of this day. This was Fed day. This was the day after Fed Day. It's a little out of whack, but hey, that's the way it rolled. So I mentioned yesterday that the step line was leaning right, getting ready to cross blue and climbing. And when that happens, we know to expect a retracement back to the BBC. Now the new all-time historic high is 57.97.5. Yesterday's high 94.25. And what 97.5, 94.25, and today 98.75. 98.75. That does not look. That's 97.5. That's the high. I don't see how that high is higher than that high. Let me refresh this. Something's a little out of whack. $97.5, 98.75, 94. I guess there's a little bit of a wick sticking up in there that I can't see because of this line and the 62% fib extension. So we go to the smaller time frame, we'll be able to see exactly where the high is. The daily chart is important, not because you're going to trade it, but whether you trade futures or stocks or crypto or Forex or ETFs. If you'll spend 2 minutes with the daily chart of whatever it is you're getting ready to trade, you'll see what the deep pockets are up to. Institutional traders are the ones who actually move price. And they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with the account size. The size they trade in moves price. So for free, you can look over the shoulder of the best and see what they're doing at any given time. And free is a good price. We're coming back down. There's support here at the step line in blue and climbing. If we trade below this area right here, and our next support is at the 50% fib extension, then the daily BBC, and then the 38, and we have this bullish cross right here. Anytime you have a bullish cross, that's when the blue line gets above the green line. Bearish cross is when the red line gets below the green line. When you have a bullish or bearish cross that leads to an extended move, the first time price revisits the area of that cross will almost always be good support, or, as in this case with the bearish cross, good resistance. So this number may not seem so terribly important right now. 56.37. The 24% fib retracement is at 56.28. That's below the bullish cross. So you've got support there, and then again right there. And then again right there. The 24% fib extension. All right, all the alerts, as you know, are created on the 30-minute chart. The weekly trading zones are published Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Vertical line separates today, Wednesday, from Tuesday, from Monday. Price rallies up to a zone, we look for resistance. When it drops to a zone, we look for support. Support yesterday. Support today. Now, when price encounters a weekly zone, 70% of the time, you're going to get consolidation like this. 20% of the time, you'll get rejection like that. Then about 10% of the time, a slice. That's where price slices through a zone on a 30-minute chart like it's not even there. When that happens, what typically happens is price, when it runs out of steam, will retrace to the zone it sliced through, then continue in the direction of the slice. So this was the open last night. 5 minutes before this candle closed, that's when the targets came out. And we had blue and climbing directly above price. Now, blue and climbing obviously is bullish, red and falling is bearish. But when blue and climbing gets directly above price, it often becomes resistance because it's on its way to becoming red and falling. It's always going to be one or the other. Red and falling, price falls. Blue and climbing, price rises. Till it switches gears. So we come down and we hit to the tick the short target. Now if you look over here, see that bullish cross? This candle here is a little bit of an anomaly, but there's the bullish cross right there. So we came a little short of making it to the zone overhead. The opening candle took us up to 94.5, so 1.5 points. Zones are an area, just like fibs. They print exact price points on your chart, but they're still an area. So price came down to the target. Support bounced up to the BBC resistance. Resistance will always send the market looking for support. And again, when price drops to a weekly zone, we expect support. Even when it spikes it like that, it gets rejected. Down here, we spiked it, but in both cases, we closed back above it. So we then got above the BBC, and we made a run all the way to the zone, 96/97. Those are the zones published Monday morning at 6:15 a.m. Eastern. And here they are on Wednesday, still doing their job. Hopefully you see the clear window of opportunity here from 57.77 down to the zone at 75. The zone is 74.75. Could you get in sooner than that? What's the low of this? 78.75. Nope, I would wait for 77. Trade it to 75, and that's your goal for the day. With red and falling overhead like that, a much higher degree of probability price is going to trade lower before it trades higher. Okay. If price continues lower, we're going to find potential support here. But if we trade through this zone, then we're going to get a bearish cross like we did right there. On the Dow, here's where we opened last night, right at the weekly zone, consolidation, and then a drop right to the short target, which was this low from yesterday. That bounced us up to the BBC resistance, sent us back down looking for support. And that support came in earlier than expected. Markets were very bullish up until the Wall Street open this morning. Okay, and when the Wall Street open happened, we made a run up to the zone overhead here on the Dow, 670/675, but that quickly reversed. By the end of the 30 minutes, look where we were. That's just my own preference. I don't do anything during the first 30 minutes. The volatility is just, I mean, you need volatility to be able to put on a trade. but I prefer to let the markets calm down a little bit. Michael hits ground running every morning, right at 9:27, 9:30. He thrives on that quick volatility. So we made it all the way from the short target all the way to the long target. Found resistance at the zone. It sent us back to this zone where we consolidated, and now we've come to this zone and found support. 42,295/42,300. And we've bounced up to 42,310. Notice that the step line is starting to curve to the right. If the step line crosses red and falling, then we'll most likely see a retracement back to the VBC. But to get to the VBC, price has to overcome the step line and red and falling and the weekly zone. On the Russell, here's where we opened last night. And 1, 2, 3, 4 candles. That's 2 hours consolidating right at the zone. We had red and falling overhead. Once price got below the VBC, it took us right down to the short target. Subtle bottom right here. Spiked it a little bit and then continued on down to the zone where we found support. Support always send us looking for resistance, which we found. Now, this is a slice right here. Price sliced through the zone like it wasn't even there on the 30-minute chart. But when it ran out of steam, it retraced back to the zone, 46/47. And then continued in the direction of the slice right up to the target, to the tick. Right there. That resistance, the Wall Street Open, took us down through the short target. We hit this zone where we found support earlier in the session. It bounced us all the way up to the BBC, which we expect to be resistance, and it was. Resistance has sent us looking for support. And we've only got one zone left below, 2183. On the NQ, we hit the zone, looks like to the tick. Now, blue and climbing, you expect that to be resistance when it gets directly above price, but we poked through it, had to touch that zone like this and these guys here. We touched it, and then things changed. Blue and climbing continued its journey to red and falling, took us all the way down to the target, to the tick. Support bounces us up to resistance. Resistance sends us down to support. Now this support, you see this low right here? It's your support right here. Support sends us looking for resistance. And we finally found it way up here at 2271. And now we're consolidating at the weekly trading zone. All right, that covers all the indices. We'll pick up with crude when I come back. Michael's going to give us a recap of what happened in the live training room. And then we'll go live on TradingView, do some live trading, and then I'll be back.
Okay. All right. Excellent. Here we go. This one and this one.
Okay, looks
Good.
good. Yep.
Excellent. All right. What am I looking at? Oh, the ES. I was checking to see how high the ES got during the break. It didn't get high enough, did it? Nope, it did not. All right. This was aggravating. Hang on. Bring this up. Here we go. So, good afternoon, everyone. Today is today Wednesday? Today is Wednesday, the 25th of May. Thank goodness. Today is Wednesday, the 25th day of September, 2024. I was thinking it was Thursday. If you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingIQ.com, click on the purple button right here. Okay, when you click on that purple button, there's no credit card required for the trial. Just click on that purple button. And that is going to bring you to this registration page, where all that we ask for is your name, your email, your phone number. Down here, if you, well, you got to fill out these. They're all multiple choice questions. Just fill them out. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. All right, hit the register button. Once you hit that register button, you will be sent everything you need to get into the room in the morning. And we will be sent all this information so we can set up your indicators to get them indicating on your charts at the beginning of your trial. And that's ideally where you want to be indicating at the beginning of your trial. All right, so the spreadsheet, let me put that up here. Something happened to this other thing behind, and I can't get to all my tabs. But anyway, on the spreadsheet, we are, that is the beginning of the year. So we'll go down here to where we currently are. We had a pretty good day today, not great, but we had a pretty good day. We did get the goal early on, and that's, getting the goal early on makes for a really good day, any day. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 25th day of September 2024. We made 49 ticks on the NQ, 20 ticks on the Russell, 35 ticks on the YM, and we didn't do anything with the ES. That put us up $520 per contract on the morning session. Today took 3 minutes and one trade. You get to $2,160, just like yesterday. And we took a total of 8 trades today. So we didn't trade much at all today. We didn't trade much at all. On the month, now we're at $15,145. That's over 17 trading days, averaging $890 per contract per 2-hour trading day. Now, being in the larger time frames like we switched to this month, we switched to the larger time frames. There are going to be days where if there's no volatility, where the volatility dries up, like today, we're just not going to have a lot of trade setups. Now, I'll go through all the trade setups that did trigger, and the ones that we took, and the ones that we didn't take, and all that stuff. But I just want to make you all aware of that. There are going to be days where we don't have a lot of trades. I can always switch to a smaller time frame, but anyway, on the year now we're at $84,945 over 180 business days, averaging $471 per contract per 2-hour business day. Following the 24/20 blueprint, if you were to start this year with one contract and add one contract per month, so far this year, you would have only had to work 50.81 hours, almost 51 hours, and you would have averaged $2,559 per hour. All right, adding one contract per month, that means you'd be at 9 contracts right now. And we are going to be at 9 contracts until next Tuesday. We'll go to 10 contracts. All right. That is the plan. That's what we're doing. And that's it. So let's go through the trades that we did do today. All right. The YM did not have our number today. As a matter of fact, the YM's got another trade triggering right here, right now. And we were able to get some pretty good traction on the YM today, finally, after a couple of days of not getting a lot of traction on the YM. We didn't take all that many trades. Here, there's the one that I was saying is right here, right now, is actually running into profit. And I'm going to lock in 5 ticks. I don't have a very good entry on that. All right. Now that should go down to the weekly trading zone down here to 303, or 300, I guess is where the weekly trading zone is. That's where it should go, right down to there. So that'd be 17 ticks if it gets down there. I'm going to have 5 or 17 on this. I'll leave it right here. Okay, I'll leave it right over there. We can watch it together or not. Our first trade here on the YM, we picked up 15 ticks. Then the next trade, this is where I suggested it was going to go down. The market actually suggested it was going to go down there. And it did eventually get down there. It took a little longer to get down there than I thought it was going to, but it did get down there. Using the dime principle, it did finish it up, but it pulled back deeper right here. That's what made it take so long. All right, so 5 ticks is what we ended up with. The next trade that we took was over here, and we picked up 20 ticks on that to get us to 35. And in that, I was suggesting this is how far down it was going to go. Once it figured out how far back it was going to pull, this is how far down it was going to go. Now, again, it just took forever for it to do it, but it did do it. It got it way over here. It had all this back and forth in here. And it did eventually do it. So it's been really slow today with things going to target and all that. We had in here now during the break, I guess it was right before the break, there was a trade right here. All right, came out of the overbought, all lines in the ribbon visible. Another one right here came out of the overbought, all lines in the ribbon visible. This one didn't put in a lower swing though, so you couldn't take this one. But this was the one that I just took right there. I took 5 ticks in profit. I should have let it run even further. It would have given me, the full 17 ticks that I was looking at. But this was the last one right here. It doesn't get any simpler than this, guys. All you're looking for is the ribbon to be spread, and you come out of the overbought. Bang, take the trade. All right, you're in the overbought right now. The ribbon spread. You're at the weekly trading zone. All you have to do, look, take this thing that I made right here, bring it down, put it at the top of the bar. It says put your order at 281. 281. You don't even have to do the math. All right, so the top of the bar is up here at 300, so now it would be, well, 280. 300 minus 20. Now 301s would be 281. The top of the bar minus 20. Okay, that's all you have to do. Okay, that's all you have to do. Look at that number right there, 2288. It wants to go down to that number. I know it's pulling back a little bit deeper right here, and that's fine. That is fine that it pulls back a little deeper. It actually is a good pullback, considering this is the leg length and this is a 50% retracement of that leg length. This was part of today's lesson plan. Was leg lengths, and you can see that this is the 50% marker right here. So it's pulled through a little bit. It's off the ribbon right now, and that's fine. 315 down to 95. 20 ticks below the top of the bar. That's all you're looking for. So what should it do? You see this move right here, this leg right here? Let's put that right there. That's what it should do. All right, you see that? Pretty simple and straightforward, right? That is the diamond principle kind of at work right there. If we get the trade set up, it hasn't triggered yet, but we're looking at 315, 314 down to 295, 26 below the top of the bar. Okay, now it's 18 down to 98. Now it's 20 down to 300. As long as you can still see all 4 lines in the ribbon, it's still a valid trade. Okay, it's still a valid trade as long as you can see all 4 lines in the ribbon. So we're gonna put this over here and kind of keep an eye on it. This is a valid trade, and I'll slide it this way so we can keep an eye on it this way. And then I'll get into the Russell. So what we did on the Russell today, I'll slide this over like this. Let's see, on the Russell we had just a couple of trades. So I hit Alt and over. Oops, I went right into yesterday. There we go. These are the trades we had on. Oops, these are the trades we had on the Russell. All right, our first one. Make sure that that's still up there. 20. That's there. Our first one right here on the Russell, we picked up 10 ticks right there, and then the next one picked up another 10 ticks to get us to 20. Easy money on the Russell today. It got down to the weekly trading zone, so we stopped doing more stuff there. Then it changed directions, kind of messed up the ribbon in there. Then we got into the lesson plan, so we didn't do anything else. Then during the break, right here, it was going into the zone again, so I would have skipped that. But right in here, where it came out of the overbought, right there is 10 ticks. Put in a 1 tick lower swing, so you could have taken the next one right there, which gave a nice move down. The next one right here, nice move down. And this one right here, that is currently coming together for a trade setup. All right, it doesn't get any easier than this. Well, I mean, except doing it for you. But this is pretty darn easy. Over all the years, those of you guys that have been watching this stuff with us for years and doing it with us, 27.2, it'd be 5.2. 20 ticks below the top of the bar. Okay, 20 ticks below the top of the bar. So we just triggered in over here on the YM. exactly right. Now that needs to go 10 ticks into profit. We'll bump that stop to break even. And over here on the Russell, we've got a high right here of 27.3, and we'd be looking for that. Okay, so we just triggered in over here on the YM, 20 ticks below the top of the bar. We triggered in, got a little slippage, just one tick of slip, so our stop should be 25 ticks away, and it now is. And over here on the Russell right now, we have a high here of 27.3, so our entry point is, 27.3 is the high of that bar. Our entry point is 20 ticks below the top of the bar. 20 ticks below the top of the bar. This will come on the down close. Okay. All right. So we only had those two trades this morning on the Russell. On the ES, we didn't have any trades this morning. So I don't have anything to show you here on the ES right now. And we have these two. This trade that's actually triggered and working, and this trade over here that hasn't triggered yet, that we're still waiting on the Russell. So a Russell and YM trade there. Now over here on the NQ, it sort of triggered a trade right in here a few minutes ago. You can't really see all four lines in ribbon. You got to be able to see all four lines in ribbon. It didn't really do it. Even if it did do it, it's already gone enough into profit to move the stop to break even. But let's take a look at the trades that we did do today on the on the NQ. Right? The NQ, we didn't have that many trades on the NQ either. We only had 8 trades this morning. None of them on the ES, and 4 of them here on the NQ. And here we are on the NQ. Did this get any higher yet? This stop is 25 ticks away over here on the YM. And this is 27.2 or 3, something like that. So 20 ticks below that is where our target is. All right, we stopped out on the YM. I'll slide that over here. And we didn't trigger on the Russell yet. Okay, so let's look at this right here. So this is our first trade in here on the England. This is where we got the goal for the day. Our very first trade, we picked up 48 ticks on that first one. Then we had a break even there. Picked up 1 tick there to get us to 49. And we had another break even right there. That's all we did. That was it this morning. See, the markets got really choppy in size for a long period in here. And we just didn't have any trade setups. So we didn't do anything. You know, if you don't have any trade setups, you don't take trades. You don't go forcing trades. Just because you haven't had a trade set up in a while. Right, where is the high of this? The high of this is at 27.3 still. So we're gonna leave it there. As we move through here, it really didn't give much at all. I'm looking at the ribbon here. When we had the ribbon spread out, we didn't hit the pullbacks when we had the ribbon spread out. Right here, we had the weekly trading zone in the way of everything. Yeah, you could have probably taken a long trade right here that would even hit break even. But we didn't have the ribbon spread out anywhere where we could take trades this morning. It was just not giving much up today. And that is why we only had 8 trades, I guess. So right now it's 13:08, so we have 22 minutes left in here, 22 minutes. And the YM stopped us out, so I'll get rid of this for now. Right, I'll remove that. It did not continue the trend on the way down. The Russell will still wait for this to give us a trade, and this is the only thing that's going to give us a trade right now because the ribbon's messed up there, it's messed up there, and it is not messed up on the YM too. So we're looking for the down close on this. It's not high at 22.4, so 25.4 is what we'd be selling. All right. So for anybody that's starting to watch right now, that is on the YouTube channel. Let me bring this up here and show you. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. All right, click on the button. When you do that, you'll be brought to this registration page. On this page, all we ask for is your name, your email, and your phone number. We just cancel trade. Your name, your email, and your phone number. And that YM trade is also starting to move. This has to get down to 0.3 to bump the stop to break even. Okay. I'm kind of waiting for it to do that. But if you haven't taken a free trial with us, then just come to this page. All we ask for is your name, your email, your phone number. And there are 5 multiple choice questions. Answer those honestly, please. And down here at the bottom, if you have NinjaTrader, give us your NinjaTrader ID. If you have TradingView, give us your TradingView login ID. Right? If you don't have TradingView, go to here to trading platforms, mytradingiq.com, and sign up for TradingView. Get the free version, get whatever version you can to get the stuff on desktop. You won't appreciate it until it's on your desktop. Okay. So this is the registration process. It takes 30 seconds. Once we get all that, we'll send you an email with all the information that you need to take the next steps. Get into the room in the morning with us and get your indicators indicating. All right. Still just hit the 0.3. And here it is over here. So this is what we're looking at. Now, the YM did end up going down after stopping us out. It is going down over here right now. All these other ones are starting to resolve to the downside too, right? So you get one more tick right there. I'm kind of a stickler for it going the full 10. There it is. Okay, so now we can hit break even. And now we can actually drag this one down here to break even. Get rid of that one. Put this one at break even. So now we have a target down there. And we have this. I'm going to lock in 10. All right, so where should it go? It should go at least down here to 22.3. Right, at least to 22.3. And it just took us out with 10. But it should go at least down there to 22.3. Okay. That is what I would anticipate from that. Now these other markets are starting to come together here with potential trades. You'll see. We need to spread out the ribbon. So it needs to drop down some more to spread out the ribbon on all those. This needs to put in a lower swing. This needs to put in a lower swing. All right. Any questions anywhere? Okay, I don't see any questions. I don't have the YouTube thing open, but I don't. Well, I guess I'll just open it up and see. What is that? All right, here we go. All right, I don't see any questions in there right now. So what we're looking for now is the ribbon to spread out here or here. All right, we didn't have a trade through here, so it doesn't have to put in a lower swing. So it's just going to spread out that ribbon for us. We did have a trade here. That did put in a lower swing. We did have a trade here that stopped us out, so that does need to put in a lower swing. We did have a trade here that we got 10 ticks on. That does need to put in a lower swing. All right. So here we need to just push on down, get a lower swing. It actually just needs to spread out the ribbon. So if it drops down below this level here, that would be spread out enough probably for us. All right, the S has got to get below the weekly trading zone. It's got to pull the ribbon down to the weekly trading zone as well. So it doesn't look like we're going to end up with any trades right here, right now. What time is it? 3:14, so we have about 15 minutes left. I don't know if we're going to end up with any more trades here. But let's look at the daily Bitcoin. All right, that's looking a little bearish right now. It's had a bunch of sideways days here. The Bitcoin has a bunch of sideways days. Not really much you can do with that right now. I don't know what it's waiting on. But this one is XOM. So this morning at 9:30, It should be on a 30 range, and this morning, 25 September at 9:30. Yes, it did give a nice trade. Right. Well, gave this one yesterday, right? And this was the open this morning. So I guess the first trade it gave using the ribbon. I mean, not using the ribbon, using the trigger down here. First trade that it gave would have been right in here. The first trigger that it gave was the aggressive trigger trade from right here. Right, that was an aggressive trigger, and that was from 15.16 down to 14.02. So it did give the dollar that we were looking for. Okay. Let's see. We still don't have anything on these markets yet. So let's go out one more, and we'll look at what the heck. Why does this keep doing this to me? It keeps changing my that's gonna drive me crazy. Okay, the ZB, the 30-year bonds. This morning we had one indication right here, one sniper short right there, and one sniper short right there. That's all it's given so far. Yep, that's it so far. And that was out 7. What do we have on the 8th one? I don't remember. Oh, another NQ. Okay, so go back here to 4 and see how things are going here on 4. We have nothing there, and oh, that's it. That's all we got for right now. Okay, and Miles, welcome aboard. We have nothing that we can do with this right now. We just have to wait. Now, earlier this morning, guys, I looked at the 31 range on the ES, and I put a trade on based on this right here. It ended up stopping out. Right? My stop was right down here. My entry was like right here. My stop was down here, and my target was up here. It got back to break even, and then a little bit more at one point when it got up to here, but it eventually stopped out. I stopped looking at it, and I wasn't moving my stop to break even or anything like that. I probably could have. I think my entry was like right here at 87.75, I think is what my entry was. And it went from 87.75, 5 points. Oh, good 4 points. 16 to 20 ticks, it ran up. I probably should have bought my stop to break even if I was watching. But I had to go and do something. There's a break in the storms. All right. It is 13:18 right now. 13:18. Looking here, not that one, this one. All right. So waiting, just waiting. So we're just going sideways right here, going sideways right here, going sideways here, and sideways here. Does anybody have any questions about anything? Anybody want to look at anything else? Gold and crude oil have been things that people want to look at lately. I'm going to go back to the 7 range here on the ES. Now, John G, is he in here right now? He emailed me last night. He's not. Okay, I think I said this yesterday, but I'll say it again. If you're doing something that's base 10, like this is not base 10. If you're doing something that's base 10, like crude oil, for instance, we do CL. You're doing something that's base 10, like the crude, you want to work on a multiple of 10 minus 1 time frame. Okay, multiple of 10 minus 1. So like a 9 or a 19 or a 29 or a 39. Multiple of 10 minus 1. That way, when you know where the top of the bar is, it's going to be like, I mean, a 7's not going to work in here, but let's go to a 19, we'll say. All right. So if I were looking to short down close, it'd be 20 ticks away from the top of the bar. And that's pretty easy to do. The math is easy to do because it's base 10, right? So 69 down to 70, 69.7 down to 69.5. It's 20 ticks away. So the math is just easier to do. Now, the alternative, you can see we did some stuff on here this morning. The alternative, and this morning I was saying it's going to go down to this level right here. I wasn't on this time right now, I don't think. Oh, no, I was. I might have been on 19 or 9 or 29 or something like that. But anyway, the alternative is to do this, right? You take a rectangle and create a rectangle that's 20 ticks wide. If you're on a 19 range, create a rectangle that's 20 ticks wide. And you just have to come in here to coordinates and make it 20 ticks, 69.76 up to 69.96. That is 20 ticks wide. Okay, so now you can take this thing and put it at the top of the bar like that, position it at the top of the bar. So you know you got to sell 69.5. Right? If that is positioned properly at the top of the bar, then 69.5 is what you'd be selling on a down close. Right? If it were a valid trade setup, that's how you would do it. But either way, it's still easier to do. It's easier math if you use that type of range bar. And the bigger the range bar, it's something else I was saying this morning, the bigger the range bar, the smaller the stop has to be, the more likely it is to be the pivot bar. Okay, the bigger the range bar. So if you were to bump this up to like say a 31 range, not 31 range, this would have to be a 29 range. If you were to bump this up to like a 29 range, when it pops out of the over bar, that is more likely to be the pivot bar. Okay, when it pops out of the over bar, more likely to be the pivot bar. Okay, and when it pops out of the oversold, if you're looking for a long trade, when it pops out of the oversold, it's more likely to be a pivot bar. Okay, and you're looking for shorts. In here, we're looking for longs pretty much all the way up. So it popped out right there. That wasn't a pivot bar, but to be enough to get the stop to break even. This one was the pivot bar. This one right here wasn't the pivot bar, but this one right here, well, it was for a little while. But the bigger the time frame, the more likely it is to be the pivot bar. Okay. So the smaller your stop has to be with respect to the actual bar size. So if you have like a 29 range bar, your stop could be like probably 35, 36 ticks. Okay, as opposed to with a 10 range or a 9 range, your stop would have to be like 15 ticks. So that's like 66% more than the bar size, as opposed to 20% more than the bar size with this this bar size. Okay. All right. Well, we almost have a lower swing over here on the Russell. Almost. We didn't quite get a lower swing here on the YM. On the crude oil, this right here would have been a short trade from right here, 69.66. It pulled back 4 ticks. And so far has run 14 ticks. So that's $140 a contract. That distance that it's run so far from this down close right here. Okay. That's crude. Now, if you're going to do something with gold, you'd pretty much do the same thing with gold. Do GC. And you pretty much do the same thing with this. See right here, you'd be looking for a down close of this bar right now to pull it out of the overbought. You'd have the same, well, you could create your own box for this one. It'd be a 30 tick box on this that you'd have. Okay, but from the top of this, 82.7 minus 30 ticks. Minus 30 ticks, 79.7. There. All right, now that's not what it ended up being. If this bar does close down, it's not going to happen, I don't think. But if it were to close down, it'd be a trade setup in there. But you can see in here with a larger time frame, again, with a larger time frame, the bars that come out of the overbought or oversold tend to be the pivot bars when you have everything going with it. Okay, over here, the larger time frame, pivot bar, pivot bar, pivot bar, pivot bar, pivot bar, pivot bar. Remember, you only need one of those to be right. One of those a day. If you're doing the 24/20 blueprint or any kind of blueprint, you just need one of those a day to be right. Okay. Going to all right. Let me just check this. What time did I come in? 12:28. What time is it right now? So we just got our lower swing here on the Russell now. We just got the lower swing. All right, I guess this is going to wrap it up, guys. So we had one decent trade and one stop out while all this was going on. And I got to show you some other stuff. So if you have not taken a free trial with us and you want to, then go here to mytradingIQ.com. Click on the purple button on the home page. This purple button says start your free trial. 30 to 11:30 Eastern time. 9:15 to 11:30 Eastern time. Let's start your free trial there. No credit card is required for the trial. All you need to do is click that button, fill out this form. It takes 30 seconds. When you do that, we'll get your indicators indicating for you and give you all the information you need to get into the room in the morning. Okay, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Plane is ready.
Sir, recap of the morning session.
Today it took 3 minutes and 1 trade to get to $2,160.
Good job.
Thank you.
All right, guys, we'll pick right up where we left off. Crude oil. We had crude inventories today. So we opened last night right at the weekly zone, consolidated for hours. 1, 2, really about 4 hours. And that's what happens 70% of the time when price encounters a weekly zone. Price got below the BBC, blue and climbing, turned to red and falling. That took us right down to the short target. Support sends us up to resistance at the zone. Price moves up to a zone. Expect resistance. When we drop to a zone, we expect support until proven otherwise. And so we have this little double top here, and that sends us down to the zone below, which is 70.90/95. Bounces up to resist this support, sends us to resistance at red and falling. And that resistance sends us across 2 zones. We find support at the zone at 70.05/70.10. Support bounces us up to resistance. Pull back to the VVC holds more often than it doesn't. VVC simply stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Markets are fractal in nature. You can apply the VVC to a 30-minute chart where all alerts are created. You can also put it on a daily chart, a weekly chart, a monthly chart, 5-minute chart, a tick chart, range chart. It's going to function the same. Whatever market you put it on, whatever time frame you put it on. Price gets above it, anticipate higher prices. Price drops below it, anticipate lower prices. Always relative to whatever time frame you're working with. Okay. Now, our lowest weekly zone for crude this week is down here at 68.20/25. So you got to be from 69.40 to 69.30 right there. Perfect window of opportunity to get your goal for the day. Then, in order to trade on down to the zone, you're going to have to go way back and look at market structure the last time we were down in this area, because the market has a memory. Okay. Gold. Here's where we opened last night. Ran into red and falling, resistance. Sent us almost to the BBC. We didn't quite touch it, but it was close enough. It gave us a bounce, took us all the way up to the long target, through the long target. If you, again, go this way, see where the market ran into resistance. Resistance sends us back to support. Get below the BBC, but we find support at the zone. Looks like to the tick. Support sends us back to resistance up here at the long target. And that sends us back to support at the weekly zone. Bounced off that weekly zone, and we're headed now. We've overcome red and falling. We've overcome the BBC, overcome red and falling. So right now, 26.88 to 26.89. That would give you gold for the day. Silver. Silver's had some huge days, some $5,000 per contract days of late. Day, as you can see, it's an inside day of yesterday. In other words, we haven't taken out yesterday's high, we haven't taken out yesterday's low, and we've just mostly consolidated right along this weekly zone at 32.11/32.12. We did pop down and tag short target, which was based off this low right here. About to get a bearish cross. If this candle turns red, then 32.04 down to 31.94. That would be $500 per contract traded. The euro, we opened here last night. Tempted to get to this zone, but blue and climbing got above price, and we know that turns into resistance on its way to becoming red and falling. That sends us back to the zone where we have support. A few hours, consolidation. That's what you get 70% of the time. And then we get a bounce back up to the zone. We spiked the zone, closed right at it. And then that sent us back down to support at the short target. Now the step line is starting to hook to the right. If that crosses red and falling, you should anticipate price retracing back to the BBC. And one last look at the daily chart. Okay, that red candle we were looking at earlier. Notice the step line. It's just on the verge of crossing blue and climbing. If we close the session today below blue and climbing, then your next major area for support is going to be the 50% fib extension. See the low here, okay? We get below the 50, then you've got the daily BBC, which lines up with this low right here, and then you got the 38, then you got the 24% fib retracement, then the 24% fib extension. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. Once you become a passport holder, you'll have 2 hours of live interactive training every trading day. You'll also have access to private one-on-one mentoring, strategy you learn, the indicators you own as a passport holder, fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over. And then again, it's a never-ending cycle. Also, as a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening when they're published shortly after the Globex Open. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And again, once they're published, they're carved in stone for the entire week. And you'll be able to attend the members only workshop every Thursday night, and that's tomorrow night. So if you've been on the trial and you want to be in the members only workshop tomorrow night, which also gives you access to all the previous members only workshops, you should get an email today or tomorrow or both with specific instructions on how you can become a passport holder. Okay, let's go to our good word for the day. For the last 3 days, we've been talking about rebuilding your marriage, and we're going to continue today with part 4. Solomon 8:7, Song of Solomon. Many waters cannot quench love, nor can rivers drown it. You must be open with one another. You must be transparent, sensitive, responsive, and willing to trust one another. Stop and think about how you feel when the doctor is about to give you an injection. First reaction is to tighten up, right? Similarly, our hearts naturally tighten up after the pain of rejection, betrayal, or neglect. It's a reflex mechanism in the soul, a way we protect ourselves subconsciously. And it's a great attribute anywhere else except in marriage. If you don't turn off this mechanism, you'll close off your soul. This is the state where you love the person and still come home to them every night, but you're braced, apprehensive, and no longer present in the moment. You have closed yourself off for fear of disappointment and hurt. Marriage is an open covenant consummated by physical intimacy, which removes all barriers and celebrates the joy of having nothing between the two of you. And it's difficult to attain and maintain such intimacy, both emotionally and physically, if you have experienced betrayal and disappointment. But there is good news. The central theme of the Bible is resurrection. That which is dead can live again. So, if you have lost the closeness, you can get it back if you are willing to relax your soul and open your heart towards the other person. Solomon writes, "Love flashes like fire, brightest kind of flame. Many waters cannot quench love, nor can rivers drown it." If you seek God's help and you are willing to work at it, you can rekindle your love and build your marriage. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.